TGIF Warriors. Hi, Sinatra. Marcus Tommen, welcome to F.A.C.E. Sinatra, your new name, Marcus, to me. Hi, Bran. AJ, Laura, how are you? K-Man, Lucas, Marshall, welcome to F.A.C.E. Hi, Ryan, Andrew, Michael Weissman, how are you? Okay, TGIF. Here's Euro. Here's cable. Dollar still has some juice in it. What do you think, K-Man?
Good morning, Dale. Good morning, everybody.
Good
TGIF.
morning.
We are waiting for those CPI revisions.
Yeah.
Being hyped up by Waller himself, so the market is probably going to react and possibly overreact with when it comes out a tick higher or lower than they were originally. Euro dollar is pegged. We are waiting to see if we break 107.1025 or in turn going to have a look at the 108 and a quarter again. That's about all I can say about the euro. Crosswise, euro, depending on which currency we look at, is still holding up okay. Cable, we're in the same situation. 126, the figure around, popping up and down, and now we are here, back in the middle.
Yeah.
With you. I think there's a couple of more interesting ones to watch, and one of them is dollar yen, which is pushing on. That's not gonna need a very big revision higher of those CPI numbers to go and tackle or test at least 150 and a half. Ueda overnight said the same thing as Uchida and Shimizu the day before. It's all going to be very slow, and yeah, they don't give any food to the yen bulls again.
Okay. Let me ask all of you. This happens to me, and I just want to know if it happens to you guys too. So, you know, when you look at the euro, when we were up here, my target was 107. Okay. And then it gets down here and you go, oh, you know what? It's so weak. I don't know. I need more confirmation. You know, came within 20 pips of 61.8. Or so now it's here and you're doubting what you wanted to do 400 pips ago, your zone. So anyway, I just put on a just in case long. Okay. And, you know, I'm willing to scale it down to 6 from here. If it's, you know, if this isn't it, but, you know, then you feel like a clown because it went to your zone and the market takes off, even if it's just a strong bounce, because what you were looking to do, your game plan a month ago was there and you did nothing about it because once it was there, you doubted it. You ever go through that with markets?
Well,
Okay,
I
man.
think over the course of my how much is it now? A little bit over 4 decades in the market. I think there's been quite a few occasions that happened, but it's human. It's human, you know. We shouldn't be letting our emotions take over, but it's human. It's human. There's been quite a few occasions it happened, and wow, it's probably going to happen again, you know. But the key is to put those things aside, and sometimes I mean there's many possibilities. You can do a tiny bit. So if it goes against you, you're not going to lose a fortune. You're not going to put your account in danger. That is the best way to do it.
Okay.
But
that's
on
what
the
I
other
did.
hand, sometimes I also already take comfort of the fact that I haven't changed my mind and went short at 107 when I was planning to buy at 107, because that would be a very big mistake if then it rallies. So sometimes I take comfort of saying, like, I've seen the bottom and I thought it would do that. So that keeps me in the right mindset towards what the market is doing.
Yeah. Okay. I bring it up, and I bring these things up because our community, the F.A.C.E community, people watching it on YouTube, um, to let them know that they're not the only ones that go through this, mental machinations when, you get to a level you've been looking for a while, and then you begin to doubt it because, well, my reasons are, I doubt it. My doubts are because of this. I changed my mind once yields started to look like they could explode. So why should I be in a hurry to fade the dollar if I believe we're going to 440?
Mm.
If we fail from here at 420 again, then I think the dollar may have peaked. But I still believe this. So, you can always find a reason not to do something, can't you?
Oh
Yeah.
yeah.
Uh, but price is your most important, consideration when you're taking risk. How do you overcome that, Ryan, if it does happen to you too?
There's one thing you've got to ask yourself in the case of your euro dollar trade. You're 380 pips in the green. Do you want to give that up for the sake of trying to nab another 25 pips? When,
Oh yeah,
like,
that's about covering the short. But what about it got to the level where you wanted to buy it and then doubts start coming in, or a level where you wanted to sell something
yeah, yeah,
and yeah. So how do you overcome that? You just say,
yeah,
well, if it goes without me, it goes without me.
yeah. There's two ways you can do it. You can take a smaller trade because you've got less conviction, so you keep your risk down. That way, if it does go, you've got skin in the game. If it doesn't go, well, you haven't lost much. But
Yeah.
then you can also, like you say, you compound it. So if it starts going your right way, then you look at the next level. If it breaks the next level, then I'm going to add. So you
Got
look
it.
for confirmation reasons why you should get into the trade rather than waiting it to hit a level before you trade, if you know what I mean. And
Okay.
that's the way you do it. I've done it. I did it with the S&P. We broke that 4,800. It wasn't long before I bought it on the break. Then we had the
Right.
dip 48.50s. That was my level for where we might dip to, and I picked it up again. I waited for that confirmation. If it had kept on going, I wouldn't have had the extra trade. Tough shit. You move on.
Yeah.
Similar, like you say, on the way up here. We were all talking about 5,000 this week. I was going to knock some out 4999999, whatever it is. It didn't get there, so I knocked some out 89. I'm not going to be a dick for a tick for 11 pips just because I want a particular number. So you've got to. It's all about the management. It's all about judging the conditions at the time, and that's the only time you can make a decision. You can't make a decision what happens in 2 days' time or 2 days ago. You can only decide on a trade right there and then in the moment.
So the way to overcome the psychological, mumbo jumbo that your head goes through, and I believe that just like they say, real estate is location, location, location. Trading psychology, psychology, psychology,
Yep.
and the way to overcome that psychology is with numbers and getting back to the charts and just trading. Forget about correlations for a while, like yields and
Yep.
currency,
Yep.
and just trade it like it's an individual entity that is not connected to anything, and trade that chart.
Exactly. You have one number, a line, a fib, a moving average, whatever. You have one number. You make a decision against that number. Do I trade it? Do I not? How do I trade it? That's it.
So,
It doesn't matter what the fundamentals are or anything. One number.
Dale, you called it mental mumbo jumbo. We do call it mental masturbation.
Yeah.
So you can say that here. You can. Hey, I got to show you something. I got to take
Why?
I got to take the charts, and now I got to show you something. You guys are gonna love this. Just kidding.
All right, go ahead, man.
I got to show you this because we're having this conversation, and Wuju, who's one of our newer traders in our chat room, pretty interactive. He posted this chart and he said, "I would like to sell the euro dollar closer to 108.20, underside of the cloud, but when it comes, I know I will change my mind." And that was this morning. We were all laughing because we're like, how many of us have been there? And this is the exact conversation that you're having, Dale. It's like when price gets there, when you get there, you're going to be like, okay, now that we're here, do I take the trade? No, but there are a lot of things that you need to consider. How fast did it get there? Why did it get there? What news, what events are happening around this level? Like if the euro raced up in this example, if the euro raced up to 108.20 right now, ahead of like the CPI revision, I'd be like, hell no, I'm not shorting the euro now, but if it got there and stalled following the CPI revision this morning, maybe then I would be like, okay, we've gone far enough and we can't push any further, then I'm going to trade. So it has, price is part of the equation. The rest of the equation, there's so much more to it. And that's why, being in a community and chatting about the different things that you're seeing and having a community to just really talk about it and not get trolled on the Twitter sphere or something is important. And that's why we have, the ForexAnalytix community. So anyway, that's a great conversation that you brought up, Dale. And I think there's a lot of, it's so important.
And you brought up a great question to ask yourself when you get to these situations. What conditions brought it there, and have they changed?
Yeah.
Okay. So I mean, that you helped me. So, I don't ask myself that question. What conditions got the market to that level, and have they changed? And if the answer is they haven't changed, then, you can go ahead
and trade.
Yeah.
Right.
Yeah.
Hey, just a heads up. We have a Canadian jobs report coming out. Take a look at the dollar CAD, really wound tight at the 50% retracement. We're at the 50 DMA, pushing below lows. We have Canadian employment coming out same time the CPI revisions coming out. So just a heads up. We should get some volatility today. Do you guys have any flavor on the Canadian jobs report today? It's supposed to be stronger. Then like a lot of people are expecting a really solid number, like, well above 30,000. And we're expecting, the market's expecting about 15,000 jobs, 16,000 jobs. You guys have any thoughts here?
Yeah, there's always a bit of uncertainty on those job reports around the turn of the year. And this is January. We used to have like complete opposite reports between November, December, and then January, February. But the pandemic threw that all upside down, and it's a bit it's not very comfortable to put something on there. It looks as if they will rebound a little bit, and I think today the balance of the full and part-time employment may actually be perhaps even more important than others, because we have seen a job shed in the full times in December, and I don't know if the Canadians rehire those people in January. So we may have a pretty positive perhaps report today, but that's really on the tip of my toes. I'm not going to place a big bet, just react on the data really.
And it looks like it's leaning into it. And one thing I've learned over the years, Canadian jobs and Canadian data tends to get leaked a little bit. So seeing the Canadian firm up ahead of the data always makes me scratch my head a little bit. So anyway, I think we've got a nice wedge. So manage your Canadian risk at this point. I think that you need to. And then obviously, if we get a reversal above like these recent highs, we're going to get a little bit of a squeeze back up towards, the 135 level. So anyway, we also have the CPI revision. Ryan, what do you think is going to happen here? Because last year it's what jolted the market, right? I mean, last year the revisions came out and it did move the market. So are you expecting anything today?
To be honest, I don't even remember when it happened last year. Yes, everyone's looking at it. That makes it a thing just in itself. As Kay mentioned, we got Fed heads looking at it as well. Can it be a thing? Yes. I think the key to it all is whatever happens, there's going to be a Fed head coming out, either dismissing it or, still keeping the Fed line intact. So if it comes in soft, the market's going to go, oh, dovish, pricing more cuts. and the Fed will come out and go, well, yeah, it's been revised down, but it doesn't change our view. And if it goes the other way, then the same thing is going to happen. Policy's in the right place, blah, 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 so on and so forth. So I think trade the initial reaction. And like you say, when you're looking at prices, what is the reason that's driven it? Has it been a game-changing number? Does it mean the Fed are going to start hiking or cutting more realistically? And if the answer is no, whatever move happens, you probably, pretty guaranteed it's going to fade back to wherever we started eventually. So, yeah.
And don't forget, we do have CPI next. We actually have CPI data next week.
So look for short-term volatility. There's been nothing going on in the market at the moment, so the market might want to jump on it. But if it's not a game changer, don't expect to see huge moves over it. And that's the kiss of death from me. Yield to be 450 by close of business, probably.
Yeah, we'll talk about yields here in just one second. But K-Man, any flavor on your thoughts with the CPI revisions, especially with a lot of the Fed speakers kind of making it a thing?
Last year, those revisions for 2022 really binned completely the transitory rhetoric, right? They came in stronger than they were originally. I've seen a couple of reports expected like a tick or so, literally very little higher again than they came out. So the surprise trade here would be a weaker one. And Waller hyped it up, so we can only follow what the market is going to do with it. Looking at how the market trades, as I was saying, I would trade different pairs in a different way. If it comes in slower than expected, a little bit weaker, then you're probably going to have the commodity currencies rally more. If it comes in stronger, higher than it was originally, that's what I say. Then I expect stuff like dollar yen, dollar Swiss perhaps to fly through to see some continuation. So there's a couple of different pairs for different outcomes that I'm watching.
Yeah, and speaking of,
I'm sorry.
Go ahead, Dale. Go ahead.
I just wanted K-Man's color on the Bank of Mexico yesterday.
Neutral to mildly getting ready to cut rates.
Were they the first to raise rates in this cycle before we did?
Were they before you?
Yeah,
yeah.
Well, I don't know if
I know they were more
before us, but they were definitely more aggressive.
Okay.
Yeah. I think they're preparing the terrain like all of them. Yeah, but the thing is as well, and I've been saying that already a number of times, it's still, even if they cut the next meeting a 0.25%, it's still going to be an 11% currency. And then again, as the year advances, it's going to become more and more of a political currency than a central bank directed currency.
Thank you, Kay.
And Dale, just mind the fact that the 200 DMA has really been capping the market, and now that 200 DMA has dropped to where those highs were last week, so it's around 17.
It's like a neckline. It turned into a neckline.
Yeah, kind of. Yeah, I mean, I'm personally, I'm with you. So don't. That's where I'm at. No, let's talk about some of these currencies that are actually breaking out. You got the Swissy breaking out, dollar yen breaking out, yields breaking out. Yields aren't quite yet, but the 10-year is starting to roll over. And this is a chart that I thought was an important chart today. We were talking about it in the chat room. What once looked like a very bullish, flag pattern, take back, before we peaked there, what looked like a very bull flag pattern where, dollar's going to get creamed, yields are going to fall. It is reversed and now it's a double top. And now the risk is a double top breakdown, which means yields are going to rally further. And we're going to see that reciprocate in the dollar. Now, you're also seeing that move in gold. Gold's actually, breaking or coming down to triangle support. Obviously, if the dollar rallies, yields rally, dollar rallies, golds should come back below 2,000. How do you guys feel about, getting past like all this supply that hit the market this week, and the market absorbed it pretty well, and now you have bonds that could really come down and yields could go up. What are your thoughts here? Any thoughts on yields?
Well, I always thought that the first high that we had at the beginning of the year and then the rally was a failing rally. So I'm looking for a quality from the first decline. So what is it, about 110? You have it even lower. I think that's possible. 108.13.
Yeah, it looks threatening. What do you think, Ryan? Do you think yields are going to break out here, and we're going to, see, and can the stock market sustain this move higher in yields? I know we discussed this earlier this week, but
well, it is at the moment, isn't it? So can it keep going? Yeah, of course it can. It says, as I've been saying, if the economic excellence continues in the US versus others, then yields are going to keep climbing. I don't think it's going to go shooting higher. We're not going to see the type of volatility we've seen the last couple of years, but it could grind higher. We could be sitting in 2 weeks having the same conversation at 440 or 450. Is it going to 470 or back to 430? And then, a month on from that, 470, 480. So yeah, there's nothing in the data, in the fundamentals, to say that the path of yields and the dollar and stocks should change for now.
yeah, and I mean, look at equities. We keep grinding along this channel resistance all week long, tagging it, and just no volatility, grinding higher. Pretty amazing, isn't it, Dale?
Yeah, well, we talked about it earlier in the week that the big round number was a magnet. So here we are. If you put the Dow up, I don't think the Dow made a new high yet, but the 4-hour,
I mean, we're
that's
there.
the weakest. Yeah, we're there. So
And look
I'm
at the
thinking
Russell. The Russell actually has
looks good.
bounced this week. Now
Yeah,
it's
Russell
still
looks good.
very weak, but it's at least trying to play a little catch up, right?
Yeah.
So, and then obviously you got the Nasdaq 100 that just continues to grind higher. I mean, these markets this insatiable bid is pretty amazing. And take into account, you got copper absolutely crapping the bed. Lows right now as we speak. I mean, we're just breaking down, and it's like I sit here and scratch my head. That doesn't mean I'm gonna just run out and start selling stocks, but I'm going, wow. It's like
there's some global weakness, is what it's saying.
Yeah,
maybe China,
but no one cares. Well, China's going on New Year.
Well, no one cares about
celebrating.
No one cares about anything. I mean, they don't care about the fact that we have regional banks. The one who bought SVB in trouble now. They don't care that even Bernanke and Yellen said that the commercial real estate issue is going to continue, and they're going to have to work with consolidations and mergers. No one thinks that's a big deal. But you know what? A guy you've interviewed thinks we shouldn't discount that it could be a big deal. That's Jim Bianco. Saw that he did something, and he was saying we can't discount the fact that this banking problem could spoil the party. So anyway,
but it's still a party, and I have to say, Dale, this is very reminiscent, and I know we've talked a lot about this over the last couple of years. It's very much 1999, 2000. I know we've said that a lot over the last 12, 24 months.
It reminds me of when I was a real young guy in 1929.
But I'll tell you, it is very reminiscent of the dot-com bubble, where nothing mattered. Valuations didn't matter. Nothing mattered. Markets would just go higher no matter what. And then at some point, it did matter. But between then and, all the times it didn't matter, you can't stand in the way. You either get on the bus or get out of the way. And right now the S&P is just going higher. And that it reminds me of some sort of blow off top that we're in process of witnessing right now. And you know who called it is David Hunter.
Yes,
way
he
back
did.
when. He
Yeah.
did. I mean, the S&P was like literally right here. And he said, we got a blow off top coming. And I'm like, yeah, I don't know about that.
Yeah.
Here we
He's
are.
raised his targets to 7,000.
Yeah, that's the. I mean, it sounds crazy, but he sounded crazy here.
And then
Does
an
he sound crazy now?
80% decline. He's the most bullish bear I know that I've talked to. So after with this melt up, he's looking for a 70 to 80% bust.
Yeah, I mean, look, yeah. Ben reminds us, Ben Maldonado. Hey, Ben, good morning. And TGIF. He says, remember the metric they used was eyeballs, right? That's true. That's the .com. Hey, we don't make money, but we get eyeballs. That's a marketing trick, by the way.
Yeah.
So anyway, great stuff. We got Canadian
Ben.
data coming out. Let's start. We haven't heard from K-Man in a bit. Hey, K, what do you got going on into the, what are you really specifically, one thing you're looking at going into the end of the week that you're going to be really focused on here?
Well, I think the dollar yen is one. Yeah, I've got some more still my options in dollar Swiss running. I'd love that thing to break 88, 15, 20. That's still my magic level. For the rest, I mean, euro dollar looks so stuck, you know, and those differentials as well. I'm not even sure we can break ranges. But the surprise trade for today on those revisions will be if it comes in weaker, and then the dollar could selectively get hit versus a couple of currencies.
Yeah. All right.
What are the expectations?
Well, flat to a tick higher. No, so really not a lot.
Okay.
Ryan, what do you have as what's on your radar today for you? I mean, I'm assuming SPOOs.
Yeah, I'm going to keep an eye on SPOOs. I did have a buy stop in at 5,010 because I thought we might get a bit of an explosive breakthrough, but it's not. So I pulled that. I don't know whether we're holding 5,000 at the moment as support, which is always constructive. So I don't know whether to have a little nibble long. I'm cognizant that it's Friday, so I wouldn't be surprised to see some decent profit taking going into the weekend. But yeah, it's just currencies are stuck. I'm just looking at the vols at the moment. Euro dollar is now below 6%, 5.88%, which puts it in even quieter territory. So yeah, that's not good at the moment for euro dollar. And yeah, it's sitting on hands and waiting for something to happen.
Yeah, you can see it right here. Very, very, very quiet for vols on euro dollar.
Yeah,
so
click the vol. Click that vols button, big vols button.
Yeah.
Over to the left.
Right here. So what I'd love to see is vols pick up towards 7, and then we'd be talking.
Yeah.
But right now it is very, very quiet. And it won't stay quiet, guys. Let's just all have that basic understanding that that volatility is going to be picking up pretty soon, and when it does, it's going to be bonkers. I'm gonna say, you guys, keep an eye on some of these currencies like the dollar MEX. I think the dollar MEX is really holding up very well in this environment. It's obviously holding up good. One of the I'm going to show you guys real quick. Longer term, this is a conversation we were having in our chat room. If you look at the longer term in the dollar MEX, whoops, let me pull that off real quick.
40 seconds for the data as well, Blake.
Okay, I'm gonna get to that, and I'm just gonna tell you that this is like a Wyckoff accumulation pattern longer term in the dollar MEX. For those of you that are to focus on that, keep an eye on that. So let's pull up the data flash, and that's Canadian employment. I'm going to pull the CAD over. Here's the dollar CAD, and then whoops. And then we're going to also look for the CPI revisions too. So heads up, data should be out in 10 seconds. Whoops, let me get rid of Data will
What's
be out
up?
in 10 seconds. We'll be flipping around the dollar, looking at yields and all sorts of things here in a moment. So, but heads up, we'll start with CAD.
Decent, decent on the Canada, decent.
Yep. As the market was already leaning into it. So we're already seeing it, push down and kind of reverse a little bit here. That's 10 pips on a really strong print, which that means they were buying into it. So I'm not really too convinced here. How are we looking at for CPI revisions?
Not seen
Any
anything yet.
headlines? Okay, let me pull up.
Yeah, nothing yet on the CPI.
I got yields to the right, S&P in the middle. I got the euro to the left. I'm actually going to put the dollar yen up there.
It's fading.
It's looking around. Oh, here goes stocks. Stocks are ripping right now. Dollars pull. The revision's got to be lower. So,
Looking at it, yeah. Weaker dollar.
Yep, dollar's under pressure at the moment. Dollar yen just buckled. Wow.
But if it's out, they're keeping it secret because it's not on the BLS site yet.
It's got to be out. It's got to be out, guys. So,
yeah.
Hold on. I'm in the middle of process of doing something right now. All right. And jumping in the trades room. Just went long some dollar yen on that spike lower. Just so you guys know. I picked it up at 149 in the teens.
CPI, December CPI revised to 0.2% from 0.3%. That's on the month. That's December revision.
Gold coming back.
And, I mean, look at the S&P just breaking the hell out.
Lovely.
I think that's going to be a reversal week in the dollar to the downside if we stick. And that's a 420 failure in the bonds. Every Friday, the direction of yields changes.
Yeah, it has flipped around, but still looking around.
Oh, by the way, Adem is here.
What? He's here today.
He's here.
He's bypassing the tornado.
Yeah,
how's it going, gentlemen?
He rode the tornado to
Adam, how's it going? How's San Diego
very
looking? I mean,
sorry about that from last week.
it was this week.
I'm sorry, earlier.
It was this week, buddy.
It feels like last week.
I'm sorry. It's been such garbage weather for the last like 10 days. It's like all a big blur.
Yeah. You live here now? You live out by the coast now?
Yeah. Like
Nice.
La Jolla.
Wow. You're living large.
Seriously.
So
love La Jolla.
Yeah.
It's a bit overrated, if you ask me.
Yeah.
Arizona is quite a better place.
Really? Wow. That's 1 out of 100 that would say that.
Yeah,
So you are a radical.
Yeah.
You're living up to your name. All right.
All right. Hey, Dale, I'm going to let you take over. I'm going to jump over in the trades room. Just want to say, hey, everybody, or in the chat room. Thanks for hanging out with us all week, guys. Keep an eye on the dollar. Keep an eye on stocks. Obviously, this big breakout in the S&P just squeezed out. Anybody who was short just got their asses handed to them.
Yeah, Ryan, nice ride in S&Ps. Are you booking it?
I just booked some at 14. It looks it looks like the market was waiting for this number in case it wasn't anything bad, and then boom, it's gone.
Tip of the hat to you, Ryan.
3.3 annualized.
Thanks, and you, Dale.
K-Man, thanks for all the great color and context of what's happening in FX every day. And Blake, You're one of the best technicians I know in classical technical analysis, and I feel like we did a good job again this week. You guys out there agree? We help you out, give you an edge. If so, you want really find your edge, find it in the ForexAnalytix community. And okay,
Hey,
so
thanks, coach. And
all right,
thanks,
guys.
team.
Okay, Nuno likes it. Nuno, this is the tip of the iceberg. Okay, Adem, great to have you with us. Haven't talked in about 3-4 months. You moved from Arizona to the coast. Has it given you any kind of different outlook on markets? And always interested in your views and what you're reading. What's going to be the big story in 2024,
You
according
know,
to Radical Adem?
I wish we had spoken a week ago or 2 weeks ago, because I had just wrote a thing on how regional banking issues aren't done and
Okay.
how commercial real estate is exposed
Yeah.
directly to the smaller and medium banks. And man, after New York Citibank community, and I heard you earlier in the conversation, you were talking like how they absorbed, New York Signature Bank after they failed last year. They took like 40 billion of their assets.
Yeah, that's
They,
VB. Yeah.
yeah, they're that bank that just, what is it down like? So I'm trying to move my thing down. It must be down 70% still, 60, 70%. Yeah. Yeah, this bank, is it, you know, I just don't see how banks can get out of further fragility. Like, you have commercial real estate prices falling. Subprime auto loan defaults are at a what, 20 plus year high. Subprime is always the first piece of the Jenga to go, right? You yank out the bottom pieces and it can
Yeah.
potentially bring down the whole thing. Yeah. Credit card delinquencies are on the rise. Uh, the rate of change in, meaning the year over year change, which I always think is important, because people will say, oh, well, collectively, uh, you know, uh, the total stock of banks lending and credit card revolving credit, let's see, consumer credit, uh, is what matters. But I think it's the flow, the rate of change. And I like to tell it to people in this way. Imagine if you have a bank account and you have $100,000. That's the stock, the total amount. It's the income and the outflows. So the inflows and the outflows going into that bank account, that's going to drive the future stock, right? So if you're taking more out, that stock will eventually go down. And that's why I think looking at things in year over year terms shows the flow. So yeah, banks or credit demand is deteriorating, as you can, if you could see that here. I mean, it had a big pop in December, and now it had a huge miss. It came in at just 1.5 billion, and it's all revolving credit. So credit's tightening. Bank loans and leases from banks are sinking like a stone. They're what, barely 1%, 1.5, 2% year over year at this point. That's way below pre-pandemic levels. And yes, we could say, it's reverting from a high point in 2022, but that's what, I think that's important when you're trying to measure in inflation, and why I've been saying there's going to be more deflation than inflation. You have China slowing. China's exporting that deflation
Yeah,
abroad.
copper
They
is
can't.
supporting your case.
Yeah, no, I mean, everyone said oil was gonna, with everything with the oil cuts, oil was dying, and then it had a little bit of a resurgence in September, October. It had a pretty nice pop up to the 90s. Since then, it's faded. I mean, all of OPEC, Angola left OPEC because they were getting so annoyed at Saudi Arabia. I mean, OPEC is essentially a cartel run by a country. Saudi Arabia shows up. For anyone who doesn't know, they'll be like, hey, these are the quotas your country's allowed to produce. Most of the time, the countries cheat. Like, look at Iran. They're not under quotas technically, but their production's up 20+% year over year. Russia is producing more. They can't even get it out of the ports now, though. And then you had even and then Saudi Arabia just fell into a recession. They just had a negative 3.5% or 3.9% Q4 GDP. One
Is
before
that
that,
why they
Q3
want to
was
go? Is that why they want to go public?
with
The
Aramco.
Saudi, yeah,
Yeah, I think that I mean because this is what I try to when I was talking to people like a year ago and they were like, oh, like Saudi out and OPEC output cuts, that's going to boost prices of oil to 200. And I'm like, listen, a cartel only works if everybody plays ball. Saudi Arabia's and OPEC's market share of oil, this isn't the 1960s and 70s anymore. Like when they controlled around like 60+% of the oil market, they barely control 30 now. So when they're cutting, what happens? Prices go up. You see US frackers start record
yeah,
production. You see Guyana, you see Brazil. So they're soaking in those higher margins, right? Like by Saudi Arabia cutting oil, it's boosting prices that others are coming in and producing. And that's what we saw with Saudi Arabia. It didn't matter. It nullified their cuts. And now they're paying for it because there's such an oil-driven economy that by them trying to scale back those oil cuts, it slowed economic activity. And yes, now I think they need to do it because they're just bleeding money because they're trying to stimulate on the government side. So they need to get income from somewhere. If they can't get the price of oil to stay higher and they can't get the volume to go higher, I mean, then they're getting their lunch taken. And I really wouldn't be surprised if like what happened in 2015, 16, you see oil, Saudi Arabia try to flush out the competition,
yeah,
specifically US
because the
frackers, more
frackers,
marginal.
yeah, yeah.
Yeah, I would not be surprised. Like people are saying oil prices is probably going to go higher. I've been saying I think it's going to go lower. Like if Russia and Saudi Arabia really want to try to, I mean, Russia's in the middle of a war. They're trying, and then China's slowing. They're trying to vie for market share. Where are they going to get it? And I mean, India has been kind of the place recently. And I don't know if you saw this about a month
So are
ago.
you
Saudi
like
Arabia,
a bear looking for 60 or $40 crude in the next 12 months?
I have no idea where it'll go, but I think it'll be
Okay.
lower. I think it will be lower if the Saudis actually do try to flush out oil with the record production and China weakness continues, specifically if some kind of weakness in the US continues. Granted, the US isn't like a huge oil consumer, rate of change wise. It's not like growing in the US like it is in China. I think if there is further slowdown, I wouldn't be surprised if we see it drop back down below 30 temporarily. Because
Okay, I'd
the
like,
lower it goes, the other countries will have to produce more.
okay. So what I want to talk about, and God, everything's reversed from that. I want to bring up WTI because, I'm bearish too, but if we get through 78, technically it won't look bad, but I have this level of dem that I've had this line for forever off the prior two low 60s. But over 80 is going to look pretty good. It may
It could.
interrupt. And to back up technically what you're saying in um, what you're saying about the regionals is the weekly on the KRE.
Oh,
It's
it's just
trying to hold here. So if you look left, we went to 52. I want to know if you think that this, because everyone's just poo-pooing, oh, it's just regionals. What would turn this into something systemic? Because the money centers look better than the regionals, but could there be a contagion
there could
where money
absolutely be
centers?
a contagion.
Okay, and why don't you give us a scenario
Uh,
how that could spread from
Oh,
regionals to money centers?
I don't know if anyone's looked at let me see if I got it.
Citibank or
I
B of
was gonna
A?
say I think I mean B of A is sitting on an enormous amount of unrealized losses. All the banks are. It's about 700 billion.
Here's
Um,
Wells.
Bank of yeah, Wells. The the issue with the regional banks, I don't know if I'm sure you've seen in the news, German banks, Japanese banks now are getting killed because of the US commercial problems over the last week. Like it's already spreading abroad. They're huge investors in these products. They have no yield in those countries. So they've been buying these products, buying these banks. Banks now, the worst part, and like you were saying, contagion, because of the duration risk. That's, long story short for anyone who's interested. Banks were pumped full of stimulus in 2020, right? Stimulus is like a direct check. The thing is, when the government puts money in someone's bank account, it boosts the liabilities, right? Because that's money that can be taken out, right? You put in that whatever $10,000 in a PPP loan, etc. That individual can go to that bank and take that money out. That's hot money. That's flighty money. So they can just come take it out. The banks had to match it with an asset. Loan growth was weak. So their loan book wasn't growing. So the banks were like, all right, let's buy treasuries, let's buy mortgage-backed securities, commercial real estate backed bonds, and securitized commercial loans, auto loans, auto-backed security, et cetera, et cetera, et cetera. The
You
acronym
see my
soup.
point about the XLF?
Yeah, I
Certain
do see.
ones look like the weekly in City doesn't look so great, and B of A looks even worse. I mean, this
Yeah,
is a big
B
rally.
of A has, I think B of A has the most unrealized losses of those bigger banks, of the big
Okay.
six. They're sitting on a big chunk. I mean, remember Schwab last quarter also
Yeah,
posted
Schwab.
really bad earnings. Ally Bank is the biggest subprime or auto lender in the US. You have the Bank of Ozarks. That's a huge bank now that's exposed to commercial real estate. And I don't think it's going to be as big as 2008 in this sense, but this is the difference. In 2008, everything was stamped AAA. So banks literally did not know what they owned, right? Like even if it
Yeah.
said AAA, you were like, I don't know if this is AAA. So everything froze up. It was like a confidence failed. Now, because of the duration risk, like I was saying for before, so the regionals, they were all pumped full of money. Then the bank or the government forgave a lot of the PPP loans. They didn't pull it out of the system. So the banks were like, all right, well, there's a ton of liabilities now to match with assets. So they buy treasuries, buy mortgage-backed securities. Then the Fed comes in and they hike interest rates. So all those duration risk just went through the roof. I mean, just down the drain, technically, I'm sorry, because the bonds have severe unrealized losses now. When SVB collapsed, all it takes is one depositor, like, hey, I want my money out. And those banks were
Yeah.
forced to go on the market, sell those assets on a fire sale to raise the cash. And obviously, once that happens and someone notices, I think their first bucket they tried to sell of assets, they sold it at an 18% discount. Obviously,
Yeah,
if you bank with
to
SV,
Jamie Dimon,
yeah, to Jamie Dimon. And obviously, if you
right?
bank with SVB, you're going to see that and be like, what the hell? You just sold at a 20% loss? I want to get my money out, right? And then that's what happens. And then what's even worse is you go to the Fed or you use the discount window. And the Fed is trying to change the stigma. They actually are trying to pass a rule now that's telling banks they have to use the Fed discount window. For anyone who doesn't know, that's essentially where a bank can show up
Yeah.
with their bonds and be like, hey, I need cash at a good value. Otherwise, they're stuck selling it on the market for whatever price they can get. And but the thing is, when a bank does that, it tells other banks, like, like, why are they
Yeah.
using the Fed? It's like needing mom and dad to bail you out, right? It just doesn't look good. So so then other banks stop, using you or they
Have
won't
you ever
lend to
tried
you.
it?
Oh yeah. Oh, having mom and dad bail me out? Oh yeah. It's
Yeah.
embarrassing. And there's a stigma about it in the US. And the thing is, it's funny because the Fed thinks they're trying to
You're a
break the
character, man.
stigma, right?
Yeah.
I mean,
Yeah.
it's really what's happening. It's like you can't get your friends. Normally a bank, interbank lending, they'll be like, hey, short on reserves at the end of the night. They used to do
Yeah.
sweep accounts, all those things. Like, I need to borrow some reserves. You have extra, JP Morgan. But then if they can't get it from any of those banks and they need more, they have to go to mom and dad. And then all the like people go, well, hell, I already lent you a bunch of money, and now you're going to mom and dad for money. Like, how bad are things on your end? And the Fed is trying to change it. But the point of this is now that New York City Bank, Community Bank Corp, their loss provisions rose tenfold. Granted, now it's a bigger bank, so they have to park more money aside for capital requirements. But it doesn't change the fact the underlying exposure they have to commercial real estate, which is in a nosedive, and landlords are having trouble. Look at rents over the last couple months. They're depreciating. So incomes for rents and office vacancy rates are at 20%. They,
Especially the office. Are you talking about
exactly offices.
multifamily? It's
Yeah,
20%?
multi-fam. Oh no, I'm sorry. Multifamily rents are down 2% year over year,
Oh,
according to
big
Redfin
deal.
data I saw last year. But you're
Yeah.
right. Office
After going up
vacancy rates
100%.
20%.
Yeah.
Yeah, you're right. No, I agree.
Yeah.
It's always the rate of change, but it going
Right.
negative now doesn't help a landlord. because obviously they're fighting with more overcapacity, which we've seen a lot of multifamily home building. And now they're trying to tell people who built these office spaces, hey, convert them into condos and multifamily
Yeah.
homes. I don't know if anyone, that is not easy. Imagine an
Yeah.
office, right? There's one bathroom on a floor. You have to put a
Yeah.
bathroom. You have to redo the plumbing. You have to redo the electricity.
Yeah.
You have to redo everything. It's expensive. So what are they going to do? Take out a bridge loan, like until they can start generating money? They're already underwater on the project, so they have to get a
They're
bridge
handing
loan.
over the keys.
Yeah, and that's so they're doing write downs. And I was reading this good report by the NBER, the National Bureau of Economic Research in the US. If anyone's interested, it came out in December. Banks are already preparing for up to 10 to 20% losses on their commercial real estate books, and at minimum. The problem is a lot of these bonds, like I was saying with the regionals, after the duration risk, they can't go on the market and use these sell at this point, obviously. So they're doing synthetic securitizations, meaning they're having insurance companies, pension funds, hedge funds buy their risk. So the banks are selling the risk on their asset, kind of buying insurance, like a credit default swap from these other
Yeah.
actors. And this is the contagion I'm saying, is that if one hedge fund, let's say New York City Bank now, or there was a German AT1 bonds that was exposed to the US, they just dropped like 30%. If there's any risk of that, any other hedge fund, any other group that insured those bonds, like just because you play hot potato with this security doesn't change the fact that the potato, it could be a ticking time bomb. You're just shifting it around who holds it. And right now I'm worried is who's on the other end of all these losses. Like we just saw with China. Evergrande couldn't get
Maybe
their.
it's the depositors that are on the hook.
It could be. There's a massive amount of uninsured deposits in the U.S. banking system. What's 45% of assets in banks are uninsured? That's flighty money, right? That means if a bank, for hypothetical for anyone, if you have $1 million in a bank and you have 250 grand is FDIC insured, if the bank fails, and let's assume they don't have many assets that they could be liquidated and dispersed between depositors to get 50 cents on the dollar. Let's just say it's kaput. That's it. Individuals would only get 25% of that million. So 250 grand would be insured. So, if banks are getting stressed, that 750,000, the one that's not insured, that bulk, that's flighty money. And that's going to come in and out of that bank very quickly in this era of, online banking. And that's what we saw in SVB. The problem is banks, there was a good piece I was reading. It was Liz Hoffman's piece, but she basically was showing how banks had been putting this flighty money, uninsured deposits into illiquid loans, like commercial real estate. They can't call those loans in fast, right? That you'd have to find someone to buy them from you. And that's the problem, in my opinion, is if commercial real estate keeps falling, if regional banks come under pressure, they're going to be selling these assets, or hell, even just going to the Fed at a time where commercial real estate prices are falling even further. So it's like further selling on top of a glut. What prices are already diving, and refinancing these and getting bridge loans is expensive. And that to me is becoming an issue.
Let me ask you this, Adam. The move we had in TLT, this should have provided some relief for their duration books, right?
Yo, I'm assuming, yeah, we will see Q4's unrealized losses. I think it'll be better because of that. Yeah.
Okay, but here we are. So the big question is with rates, is this just a correction before we do this? Or are we just
Yeah.
going to bleed down for one
No,
more
no.
low?
I
No?
think TLT is gonna go
Higher.
back to
120?
much higher. Yeah,
Okay.
yeah.
Is
I
that
mean,
your
just
best
on
idea? I mean, you usually have some
I
spec ideas, long
you know,
shots, at least the
I
market
do.
thinks.
I
Yeah,
am actually. I think it's might be time to look at China. I've been very hesitant. I mean, many shows we've talked about in the
yeah,
past. I've been very bearish China for the last year.
okay,
Everyone said, "Oh, the reopening, it's going to be inflationary," and I'm like, "Yeah, I don't think that's going to
okay.
happen." Their structure of their economy is literally not meant to be consumer driven. And now they're paying the price for it because they have no consumer economy and they're just trying to export everything, which is creating huge deflation at home. And deflation, obviously, in a leveraged economy, that's the worst situation you can have is debt deflation. It's literally the
Yeah.
worst combination. So But now it's gotten to the point that the FXI has been beaten down so badly that, over the last, what, 5 years, I think it peaked in 2021. I think it's down 50% now. I think having that as the
There you go.
FXI, oh, thank you. Yeah, it's been beaten down so badly that it might be worth looking at as a contrarian. Like, it's still the second largest economy in the world. Yes, they're having a demographic crisis, more deaths now births, more deaths than births at this point. Property prices are not looking good. Consumer confidence is wrecked. Their excess manufacturing probably creating trade tensions with the rest of the world because they're trying to export all their excess abroad. Europe now is nagging at them. They're like, hey, stop over flooding us with your overcapacity. But at the same time, it could look good
Maybe
just
we
because it's so
need,
beaten down.
we're not that far away, about $20. Maybe we need this capitulation. This is a monthly chart
Yeah, no,
because
I agree.
it was confirmed on the monthly that low. So actually, you may want to check out an interview I did with Bob Elliott, and
Oh
he
yeah, he's a
follows
smart guy.
China. Okay, and he was saying that when China was rallying this week, that you fade that intervention because their policies haven't changed. It's
Yep.
just an
No, I agree.
intervention in the market. So for
There's
you
been
to be
nothing
right,
structural.
yeah. So for you to be right, uh, and he's saying maybe they want the policy to be this way. I mean, they're not exactly for wealth creation and having people become wealthy and powerful. So,
No, they can't.
so
Yeah, they,
right?
the thing is in China, they are an investment-driven economy. It's not like the US. Like in the US, we have, for example, social safety nets. We have juiced up household wealth.
Yeah,
We have a very low savings rate, mainly because we run a huge fiscal deficit when the government is trying to offset the weaker demand. They run this huge, like in Japan situation, they run a massive fiscal deficit to try to keep money in their consumer spending. In Japan, they just aren't doing it. China, same thing. For GDP is always out of 100, right? You got consumption, investment, government, exports, or imports, exports. If one goes up, somewhere else has to go down, right? It's you can't have them all go up at the same time. It's always a trade-off. So in the US, if you juice up the consumer class, which makes up 70% of our GDP with cash, it'll fuel consumption. We have very lax debt, etc. In China, it's 50-ish% consumption. It's extreme. I don't even think it's in the top 20 countries in the world consumption-wise of GDP, and yet it's the second largest economy. So the way they were able to mask this for so long was through infrastructure spending and debt, and it caught up to them. Their macro leverage to GDP, like collective debt, not even including local governments, by the way, is around 300% of GDP. When that ratio grows, right, debt to GDP, that means the debt is growing faster than productivity. So in China, all they hit diminishing returns. For them now to rebalance, they would essentially have to switch their economy, take away from their investment share of GDP, take away from their net export share of GDP, and boost the consumption side. And I think Bob Elliott's right because they don't want to do that because to do that's politically extremely difficult to do. Japan couldn't even do it after they blew up in 91. It couldn't
yeah.
even get through the Liberal Party, their
Well,
Liberal Party, the
let me ask you
Democrats.
this, and this would be something probably cataclysmic, but here's the FXI and where a third drive line comes in, uh, $10. Can they cut them in half again? And then
I,
that's really, that's pretty
I mean,
extreme, isn't it?
anything's possible. Who knows what will
I'd try
happen.
it down there.
Oh
Anyway,
yeah, like it it it,
all right. Anyway, so you're
it's
looking
hard
at
to
maybe
say.
buying some calls. Baba doesn't look much better. Um,
No.
Baba, uh, this looks, like where could it go here? 23 from 70.
Yeah. No, I mean there's definitely potential
I mean, it's just a
downside.
line. It probably doesn't mean anything. But write those
No, I
numbers
mean
down.
I agree. I mean, but like also who knows? But I do think possibly going long call China. I'm sorry,
Yeah.
calls on China here. Even though I'm bearish China, like I don't like it, but just from a risk reward perspective, it's worth like the flyer. at this
Okay,
point.
got it.
It's
Anything
better than
else?
buying calls in the US. Yeah, I'm cautious about the US this year. I think loan demand is drying up, and without demand, wages have been weak. I think since 2020, real wages have only risen, what, 1.2% over the last 4 years. Like it's not enough to carry growth, and I think that's going to be a problem this year.
Isn't
I mean,
is
temporarily.
with your view on semiconductor supply, wouldn't
Oh,
this be also
yeah,
one of the
no.
most contrarian trades to buy puts on semis when we're worried about China? With the way things are going in China economically, do you think that makes it more likely sooner rather than later they make a move on Taiwan?
I think if if they make a move in Taiwan, I'm assuming TSMC is going to be rigged to blow. Like, there's no way they're going to hand that over to China. And I don't think China, what would be the point then? Because they depend on those the fabs in I'm
Right,
sorry, in Taiwan. Like everywhere
right,
does. I mean, US is now trying to build some here, but that'll take what,
right.
3 more years. So
Yeah.
I think until China gets their own infrastructure, their own technology to at least get somewhere to the three fab minimum, 2 to 3, which obviously that's TMC is like the biggest one. Then
Okay.
I think they might make a move. But I think if they did it, it would be shooting themselves in the foot. But who knows? You're right. I mean, like politics always trump. I mean, bad
Yeah.
politics always trumps good economics. So these
Well,
people can
that's
do
always the dictator's playbook. When the
exactly.
economy gets bad, and the population is not happy, is to unite them through a military adventure.
Yeah, find some scapegoat and
Yeah.
try
Well,
to
you know
rain
what?
hell.
You were worth the wait.
No, I'm sorry about
Oh,
Wednesday
stop saying
power.
you're
It
sorry
was
already, you
I
millennial.
mean, I know, but I do hate when I say I'll be
Oh,
somewhere and I don't be there.
all right. Well, it's the first time you're human, and you've been talking for years. It's led for you to do something on Trader Summit. You're part of the family, man.
Oh, I appreciate it, and it's always a pleasure to speak with you, Dale.
Well, people should follow your writings. I hear you're writing for other people, but most of your writing's still showing up on your website.
Yeah, the good stuff putting
Okay, the good
on my
stuff.
site.
And
Yeah.
it's what, Radical Adem? That's not the name of the website, is it?
No, it's just Speculators Anonymous, but my Twitter is Radical Adam, Adam with an
Yeah,
E. And then if
yeah.
anyone's
Okay,
interested, I just post stuff a lot on China. Like China's deflation rate last night came out, just lowest deflation in 15 years. So there is no, I don't see any economic activity there. GDP deflator's been negative for 3 quarters straight. So God knows
okay.
how that's going to end up.
Well, if you're still in La Jolla in the summer, I'm in the high desert. Fix up a cot for me this summer. All right.
Yeah, right. There's some good
We'll
deep
get
sea
together.
fishing.
All right, man. So
Sounds good, sir.
here you go. A pretty interesting take from a Dem. But with what you see with regionals, you think it's too obvious to buy puts there with what's going on?
Yeah, I think it might be obvious now, but I think there are a couple. Like I'm looking at Bank of Ozarks. They're very
Yeah,
leveraged to commercial real estate.
yeah,
I am worried about the auto lending market. Auto loans have just not been a good investment. Negative equity
yeah,
now is what, 6,000 plus a car. Subprime defaults around 7%. It's
yeah,
it's looking shaky, and it always worries me who's on the other side of those loans and how far that can spread. Like we don't know. Like look at German banks today, Japan banks. A lot of them have been racked just because of U.S. commercial real estate woes. And I think you're going to see more loan loss provisions uh, being put into these banks. But who knows? Maybe the Fed will bail them out again, and it could all be meaningless, and then they rally hard, right?
yeah.
There's always
That
something
put
that
in
can
the
happen.
stock bottom. The SVB was the March low, and it's been
Yeah,
a rocket ship ever since. So
it's very
bad
true.
news. Bank failures are very bullish equities. That's a
Exactly.
new
So
paradigm,
So
right?
exactly. So who knows? Like,
Yeah,
it could be the best thesis for fundamentals, and then
yeah,
government comes in and says, we're bailing it out, and then everything goes out
yeah,
the door.
yeah. Been there. So, Adem, thanks, buddy. Good get back hearing what you're thinking. Always
Yeah,
enjoy it, find it very interesting. I hope you have a great 2024, my trading warrior brother.
you too, sir, and hope to speak again soon.
All right. Adem, everyone follow him on X at Radical Adem with an E. And that's a wrap, everyone. Hope you had a good week. I'm exhausted. We laid it on the court for you. And don't just count your pips, count your blessings. See everyone next week. Adios. Go join the team in 10 minutes for the morning edge.